The race for the future is officially on, and the markets are feeling the heat. First up, all eyes are on Alphabet as investors weigh whether to hold or fold on their shares following a strong year-to-date performance. With heavy investments in cloud computing and AI-powered search, the company is fighting to keep its lead against rivals like Microsoft and Amazon. But rising capital expenditures and intense competition are creating a complex landscape that you need to understand before making your next move.
Your brand new iPhone deserves the best protection, and the iLume 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Next, the countdown to the biggest IPO in history is officially accelerating as SpaceX fast-tracks its stock vesting schedule. Elon Musk is turning up the pressure, targeting a potential listing with a massive valuation that could shatter previous records, while major financial giants like Goldman Sachs and JP Morgan scramble to secure their roles in this historic event. We are also tracking a major power play in the utilities sector as Alphabet secures a landmark energy deal for its new Northern Indiana data center. By partnering with NiSource, the tech giant is guaranteeing a dedicated power supply to fuel its massive hyperscale expansion and AI infrastructure needs, marking a critical shift in how data centers secure energy without impacting the local grid. Finally, we take a look at the massive windfall awaiting Alphabet thanks to its early bet on SpaceX. An investment that started nearly a decade ago could soon balloon into a staggering nine-figure gain, providing the company with a massive financial cushion to pour back into its growing cloud and AI operations. If you want to stay ahead of these market-moving updates, make sure to hit that like button, subscribe to the channel, and ring the bell so you never miss a breaking report. Ever wonder if Alphabet is winning the AI race or just running a very expensive marathon? With GOOGL shares up over 7% year-to-date, they are definitely outpacing the broader tech sector, but investors are starting to ask the big question. Is the rally sustainable, or are we staring at a bubble in the making? And let's look at the battlefield. Google still owns the throne in search with a staggering 90% market share, and their push into AI-integrated search, specifically with Gemini, is undeniably slick. If you have used the new interactive search features, you know it is a massive shift in how we process information. On the enterprise front, Google Cloud is gaining real momentum, boasting that over 95% of top SaaS companies are now tapping into their AI models. That is a serious vote of confidence from the giants of the industry. N, but here is the catch, and it is a big one. Alphabet is spending money like it is going out of style. With capital expenditure projections reaching as high as $185 billion for 2026, the company is betting the house on data centers, chips, and server infrastructure. While this is necessary to fuel the AI revolution, it is putting a serious squeeze on free cash flow and keeping profit margins under heavy pressure. Plus, they are facing absolute titans in the cloud space. Microsoft and Amazon are not just sitting around, they are fighting tooth and nail for every enterprise contract. N right now, the stock is looking a bit pricey. Trading at a forward PE of 27.8, it is sitting at a premium compared to the rest of the sector. When you combine that valuation with the uncertainty of future infrastructure costs and fierce competition, it is no surprise that analysts are currently taking a wait-and-see approach with a hold rating. N, so, what is the play? If you are a long-term believer in their AI dominance, the dips might look like buying opportunities, but the market is clearly signaling caution until we see a clearer path to monetization for all that expensive hardware. If you enjoyed this deep dive, smash that like button and subscribe for more market breakdowns. We want to hear from you. Are you buying into the AI infrastructure hype, or do you think Alphabet is overextending itself? Drop a comment below, and let's keep the conversation going. Ever wondered what it looks like when a trillion-dollar rocket company prepares to launch onto the public stock market? Fasten your seatbelts, because the rumors are turning into reality, and the countdown to the biggest IPO in history is officially accelerating. SpaceX just hit the turbo button. According to recent reports, Elon Musk's aerospace juggernaut has fast-tracked its employee stock vesting schedule to as early as next week. This isn't just a minor administrative shuffle. It's a clear signal that the company is clearing the runway for a massive public debut. We are talking about a potential valuation of over $1.75 trillion. If that holds, SpaceX wouldn't just be a big deal, it would absolutely shatter the record currently held by Saudi Aramco. Imagine the sheer gravity of an IPO that could reach the market as early as this June. And the ambition doesn't stop at the ticker symbol. Word is that SpaceX is eyeing a fast-track inclusion into the NASDAQ 100, skipping the traditional waiting periods that keep most companies in the minor leagues for years. To pull this off, Musk is taking high-stakes investors on a cross-country tour, showing off the hardware in California, Mississippi, and Texas to secure the biggest names in sovereign wealth. Behind the scenes, the financial heavyweights are already locked in. JP Morgan, Goldman Sachs, and Morgan Stanley are all grabbing their seats on this rocket. Even global players like the Royal Bank of Canada are jumping into the mix. This move comes on the heels of SpaceX's bold acquisition of Musk's AI firm, xAI, a deal that already pushed the company's valuation into the stratosphere. And let's not forget the massive winners waiting in the wings, like Alphabet, whose decade-old bet on SpaceX could net them a staggering $100 billion. It's a bold vision, and clearly, the market is watching with bated breath. But remember, in the world of space and high finance, plans can shift as quickly as a booster landing back on a drone ship. If you want to stay ahead of the curve on this historic financial mission, hit that subscribe button and ring the bell so you don't miss a single update. Do you think $1 trillion valuation for SpaceX is a fair price for the future of space travel, or is the market getting ahead of itself? Let me know your thoughts in the comments below. Ever wonder what happens when the insatiable hunger for AI meets the hard limits of the electrical grid? We are witnessing a massive power shift right now in northern Indiana, where Alphabet, Google's parent company, has just inked a landmark deal that is changing the rules of the game. They have partnered with the utility giant NiSource to lock in a dedicated energy supply for a massive new hyperscale data center. Forget the days of building first and praying for power later. This is a power-led development model, and it is a complete game changer. By utilizing a unique GenCo structure, NiSource is essentially creating a bespoke power pipeline for Google, ensuring that the lights stay on for their AI-driven operations without hiking up rates for regular folks back home. It is a strategic masterstroke that sidesteps the usual regulatory headache that comes with massive load increases. While the exact location is still under wraps, the sheer scale of 340 megawatts, with a potential boost of another 175, tells us everything we need to know. This is a facility designed to fuel the future of cloud computing and AI. This move also highlights northern Indiana's rise as a quiet powerhouse in the data center market, proving that tech giants are willing to go wherever the energy is reliable and accessible. Even investors are cheering, with NiSource shares climbing on the news. This is clearly a win-win, as big tech secures its runway and utilities get a massive, reliable revenue stream. It is a sign of the times, especially when you consider Amazon is pulling similar moves across the country. What do you think? Is this power-led approach the secret to sustaining the AI revolution, or are we just rearranging the deck chairs on a grid that is already stretched to the limit? Hit that like button if you want to stay ahead of the energy transition, and subscribe for more deep dives into the infrastructure powering our digital world. The future is being built in the power plants, not just the server rooms. Imagine holding a winning lottery ticket that could rewrite the history of the stock market. We are talking about the potential SpaceX IPO, a monumental event that could see the company valued at a staggering $2 trillion. While everyone is buzzing about the prospect of investing in Elon Musk's aerospace giant, there is one major tech titan sitting on a goldmine that most investors are completely overlooking: Alphabet. Back in 2015, Google's parent company made a savvy $900 million bet on SpaceX, securing a 7% stake. Fast forward to today, and even with some share dilution, that investment has ballooned into a potential fortune. We are talking about a valuation leap that could turn that original stake into over $100 billion. Now, let's be clear, these are paper gains for now, but that is a massive war chest to have tucked away in your back pocket. Think about what Alphabet is doing right now, pouring billions into massive data centers and the AI infrastructure race. Having a liquidable asset of that size gives them incredible flexibility to dominate the next decade of tech. If you've been looking for a reason to take a deeper dive into Alphabet, the SpaceX connection is essentially a hidden rocket booster sitting right on their balance sheet. Does this make Alphabet the ultimate play on the space economy? Let me know your thoughts in the comments below, and don't forget to hit that like button if you want more deep dives into tech hidden gems. Sometimes, the best investments are the ones hiding in plain sight.